Hello, and welcome back to Foreign Currencies with Scott. I'm your host, Scott. So, today I thought we would look at yet another trade from this method we've just introduced. And this is really a good example of what we want to see. So, I've pulled up the account to yesterday's New York close. So, right in the middle of the screen here, you will see that we are at Tuesday, May 20th in the lower left, and then someplace between 1600 and 1800 there, 1700. You can see there's an actual little gap there. Sometimes when a market switches over, there will be a gap. What I mean by a gap is that this 1655 5-minute period here, this green candle with a tiny wick below it and a little longer wick on top in the middle of the screen right now. That's the 1655. That's the last 5 minutes of the New York market. And since it's green, we know that the market closed at the top of that green body. Now, ordinarily what would happen is in the next 5-minute candle, we would see the market open at 1700 at the top of that green body, and we don't. So the market actually gapped down from the closing of the New York market to the opening of the Australian market. So what we're going to do here is we're going to go ahead and mark the price where the market closed. So we're going to tap drawings and then horizontal, and then we're going to tap near the bottom of that green candle. We've missed it a little bit, so we're just going to touch it and raise it up. Excuse me if I said bottom, I mean top. So it would close at the top of that body. That's where the market closed. Okay, so now what we see is the price that we're going to look at overnight after the New York close. So we started a bit lower and then went lower in the first 5 minutes and then came back. So we're going to actually just scroll over and see what happened between the New York market close and the London open, which is at 3 a.m. So it did move back to the line, then over the line, and then at between 2130 and 2200 here, you can see it went up, and it went up some more. Now it's midnight, still moving over, and then at 2 a.m. shot up quite a bit. Okay, so the London market opens at 3. I'm just going to expand this out a bit so we can see where we came to from 1700 to 3 a.m. So it went up quite a bit. So the New York market opened at 3 a.m. And you can see leading up to the open, we were climbing, but then it started going down by the time London market opened. So this is an excellent entry position for us. We can see that it's made a top after New York closed. It's very much further than 30 to 40 pips away from the New York close, which is down here in the lower left. You can see 1.33930, and we're all the way up past 134,600. And by 3 a.m., it had started going down. So this is a perfect opportunity to sell at the London Open. So let's go back a little and see if we can see what happened here. Now, you will notice that the New York close, as indicated on the left side of the screen there, 133.93. So that is very close to 134. It's just 7 pips away, 7.0 pips away from 134. And the even number, $1.34, $1.35, whatever it is, are sensitive points. Sometimes the market has trouble crossing it in either direction. It's just another sensitive point that the market is aware of and sensitive to. So we might decide in this case to go slightly over 1.34 as our target price. So we're entering way up here close to 134,600. We want at least a 2-to-1 ratio for our 20 pip stop loss. So that would give us 40 pips. That would give us down to 134.20. So 134.20 is plenty over the 134 even mark, but still well above our 40 pips that we would look to get to do a 2-to-1 trade. So we went ahead and put in a sell, and then the market immediately went down. One of the other nice things about this is when you put in a 20 pip stop loss, it's really ideal if the stop loss line, when it appears, goes above the peak, because then you know it's going to be hard to reach. Now, in our case this morning at 3 a.m., 20 pips was within the peak. So it was around, I'm going to draw another horizontal line just so that you can see what I'm talking about here. All right, I'm going to draw it and then I'm going to drag it. So if we had entered at 3 a.m., this big red candle in the middle of the screen here, that was at about, market opened at 3 a.m. right at 1.3444.8. So 20 pips would give us 64.8. So let's see, 64.8. Okay, so not quite, as you can see, that's 647. It was not quite out of this range. So we could add to our risk and put the stop loss up here, but I tend not to do that in most cases. So I just left it within 20 pips because I was fairly confident we were going to be going down again just from the strong move. So again, then it did go down. We set our stop loss to around here. Now see how it set a low on the lower left of your screen there at between 9 and 10 p.m. See how it set, as it was going up, it set this low. So every little mark, gonna redraw that, not sure what happened there. Okay, every little mark means something. So by 3 a.m., if we've reached up here and then we're going down, the market is going to be sensitive to this point, not just 134 even, but look at that, it just happens to be 134 even. Okay, so we went above this a little as our stop loss, and that still gives us our 40 pip 2-to-1 ratio, and you can see that the market did go below that between 4 and 5 a.m. So we were able to exit with a 2-to-1 trade win, and after that we don't really care what the market does. So we're very happy with that trade. So what we will try to do, we've done this 2 or 3 days in a row now, what we'll try to do is we'll try to do a live trade so that you can see what we're talking about, and we'll get into some more of the mechanisms if they've become lost on you since we started doing all this. All right, that's it for today. I've been your host, Scott, and this is Foreign Currencies with Scott.